What's up guys, Jake here, welcome back to the channel. In today's video, we're going to do another update to my brokerage account challenge. In the event you haven't seen any of my prior videos, I will include the playlist down below so you can catch up. But it is me versus a total stock market index fund. I started this challenge on January 1st with $25,000. This video is current as of April 15th. This is trading day 71 of 252 for the year. And the S&P is at an all-time high yet again. It struggled for February and March to get above this 4,000 point barrier, but it's basically been in a breakout the last week and a half, and we're cruising. We're at 4,177 right now. The total stock market index fund is up $3.19 or 12.76%. That's pretty good for only 4 months in the year. However, I am up a lot, 84.2%. When we look at my account performance year to date, it shows based on my cost basis of $25,000, I am up $21,093 or 84.2%. And it's been just incredible. My goal when I started this challenge was to just beat an index fund by the end of the year. And once I figured out call contracts at around this point, that's when my account just started taking off like crazy. These are my positions as of my last update video on April 7th, if you want to pause it and see how things have changed. Total, I had 14 positions, and as of today, it hasn't changed. I'm still in the same 14 positions. These are my cost basis and gain losses. Costco up 202%, Lockheed Martin up 141%, Dollar General up 178%. So all in all, still the same 14 positions, and I'm pretty happy with all of them at the moment. So I haven't sold anything or locked in a profit yet. The only thing that has changed is I bought another call contract on Northrop Grumman. So I had about $7,000 in cash in my account and I just wanted to do something with it. Northrop Grumman, of the 4 defense contractors that I hold, General Dynamics, Lockheed Martin, Huntington Ingalls, I think Northrop has the best fundamentals and the most upside potential. This breakout to watch the last 2 months has been incredible. So I currently have a call contract that I bought a couple weeks ago with a strike price of $320, and then I bought another one with a higher strike price of $340. Both of them are up on my cost basis, which is pretty great. So my cost basis for the most recent one that I bought was $1,670, strike price of $340, add $1,670 to $340, and you get my break-even price of $356.70. I think this is going to hit that next week or the week after potentially. Northrop Grumman has been valued as high as $375 in the past. And for the last 2 years, they've been doing stock buybacks. Their revenue and profitability has increased. So their PE is only 18 right now. I'm feeling pretty confident about this company and this share price hitting an all-time high in the near future. Here are all of my trades since this challenge started on January 1st. These are all of my stock swings since the beginning of the year. These are all of my option plays. I have more unrealized gains than I have realized gains at the moment, which makes me a little nervous. You haven't really locked in your profit until you sold the close, and I haven't sold all of these call contracts yet because they're still going up. I don't see the urgency at this moment. So in this video, I want to talk to you guys about earning reports. When you're trading options, especially, it's actually really important to pay attention to earnings because this can skyrocket or crush your options contracts really fast. These are the 14 positions that I'm holding, and something that you should be tracking when you especially buy options, buy calls or buy puts, is their earnings reports. And the market just reacts to the mega cap growth stocks and their earning reports. So the dates that are coming up pretty soon that could cause a lot of volatility is the earning reports for companies like Facebook, April 28th, Apple, April 28th, Microsoft, Google, Amazon. Because these companies are so large and they represent so much of these indexes, that when they report, there's usually either a buying frenzy or a selling frenzy that basically impacts the entire market. Volatility spikes. So something I might want to do, an option strategy available to me, is to sell my call contracts right before Apple and Facebook report their earnings on April 28th. It kind of feels like the pattern the last 6 months especially is that whenever these companies report their earnings, it doesn't matter if it's good. It doesn't live up to the higher expectations that all investors are having right now with the market being so overvalued. So there's usually, not always, but there's usually a huge sell-off. Even if these companies crush the numbers and they beat estimate earnings and projections, it just feels like whenever these companies report good news or bad news, there's always a sell-off of the stock. So if I hold call contracts on Apple and Facebook on the 28th, I'm definitely going to be watching them on the 26th and 27th to see if the value of the contract spikes. And the value of the contract can spike because of volatility. That's Vega, change in share price per the IV moving, the VIX basically changing. So I'm pretty cautionary about all of these stocks that are coming up. General Dynamics, because I'm up so much that I would rather, I think, lock in my profit, sell the contract, sell the close. Be confident that I've earned that profit. If there's a spike, if it goes up, I just lose out on that price movement. But if it goes down, then I can just re-enter my position. I can buy to open to get back my contracts if I want to still be holding these companies because I think an uptrend will continue. Likewise, I don't think I want to be holding these consumer discretionary stocks like Costco, Walmart, or Dollar General when they report their quarterly earnings. The last time they did this in February, all the stocks dropped, even though they showed good revenue growth. So I'm definitely going to be getting rid of my option contracts on Costco, Walmart, and Dollar General before the earnings season starts with Walmart or maybe Target. I don't know who the earliest is, but I'm going to look for that sector and see what happens when that company reports, because usually that's a pattern indication of what the other similar stocks for that sector will end up doing when they also report. And all of the call contracts that I'm currently holding are actually down because of Vega, implied volatility. And this is the Chicago Board of Options Exchange. They track the VIX, which is basically the amount of volatility in their options contracts. The VIX right now is 16.32. That's a low number. Look at where it's been previously. It's spiked, March of last year. I don't have that chart, but I think it spiked to like 60 or 80 or something ridiculous. However, it has gone from almost 20 to above 40. Here's 22, 23, back above 40. Anytime the VIX spikes, all of the options premiums also spike. So if I want to sell to close any of my call contracts that I bought to open, I can capture that change in Vega because of implied volatility spiking. So right now, with the VIX being as low as it is, if there's any kind of spike based on earnings when the mega caps report, that would actually be a good time for me to exit all of my call contract positions, not all of them, but most of them, to try and capture the value from volatility. Next thing that I have to tell you guys is I've actually been hiding something from you. This is something I've not disclosed in any previous video, but I have been trading options in my Fidelity account. I did post a couple tutorials, how to sell cash secured puts, how to sell covered calls, and you might have saw my account balance, and it's getting crazy because my brokerage account challenge with Schwab is contained. I started the year with $25,000. I can't add any of my own personal money. I've been contributing to my Vanguard and my Fidelity brokerage accounts, and when the consumer discretionary stocks crashed in early March, this was Costco, Target, Home Depot, Walmart, I decided to go all in. I decided to buy a bunch of call contracts on these companies. So what is my cost basis in my Fidelity account? These upticks is me making deposits whenever I get paid. And I made a deposit close to the end of February, and my cost basis was $32,000. And that's when I started trading options, buying call contracts, and I'm currently at $64,000, $65,000. Here's my spin wheels of your asset allocation: domestic stock, foreign stock, bonds, short-term, unknown. That unknown is options. I've just been buying call contracts with all of this money, and I am up huge. And this honestly is just insane. I've been checking this every day, and I haven't had to be actively managing it because the entire market is just going up, basically. And I happened to pick some really good stocks that had recently taken a dip or were due for a breakout. So what is my unrealized gains on all of these positions? And it's $32,000. So I started with about $32,000 in this account, and I'm up another $32,000. I bought 3 call contracts on Costco when it crashed in late February, and I'm up $10,000 just on this one position. This is incredible. So when we factor in my gains from my Schwab account trading options and my Fidelity account trading options, I'm up $53,000 in less than 2 months. And I'm going to be honest with you guys, I don't script these videos. I don't know what I'm supposed to say about this. I am not a wealthy individual. I have no background, no formal training or education in finance or investing. I started this channel as basically an experience, a challenge to educate myself and share what I learn with other people through YouTube. And this is not, this far exceeds anything that I could have expected. Like, this is insane. I, once again, am not from a wealthy family, and I'm currently serving on active duty in the military. And to be making this much money so fast, I do definitely need to put it in perspective, and I need to remind myself, I need to be rational about this, that this is not normal. And the reason why is because the market has just been on a bull run tear, especially since the March collapse of last year. And the CNBC article, says investors have put more money into stocks in the last 5 months than in the previous 12 years combined. And the previous 12 years were pretty fantastic as far as a bull run since the 2008 recession. So I just happened to start a challenge in which I was leveraging my money. Basically, when I buy a call contract, I'm controlling stock worth 10 times what I'm paying for the premium. So I'm insanely leveraging my money at the same time that the market experiences the best bull run of basically the best bull run almost in history. So this is not normal. What I'm earning on this challenge, what I'm making in the market right now, I have to just keep this in perspective and tell myself I'm not special. I don't have special skills, or it's just, there are lots of people making lots of money in the market right now, whether it's crypto or stocks or real estate. And I'm glad that I'm here. I'm glad that I'm participating. But how long can the good times keep going? I'm not quite sure. But the more I learn about options, the more I'm getting to the point where I don't care. Let's pretend that the stimulus stops, the quantitative easing stops, the Fed exits the bond market, and the money supply finally starts contracting. Let's just be honest. The reason why everything is at an all-time high, gold, crypto, real estate, stocks, is because central banks all around the world are flooding the markets with money in response to the pandemic. So what happens when the spigots run dry and the money supply starts contracting? I don't think I care. Because of the knowledge that I have acquired in the last 2 years concerning options, right now I'm buying calls and I'm selling puts because everything is going up. But if everything starts going down, then I just have to turn into a bear. I need to start buying put contracts. I could sell covered calls if I want to for sure hold index funds, for example, in my Roth IRA. You can do that. But mostly I think I will just pick the companies that have the worst balance sheets, that have been grossly overpriced, that are in dying industries, and I'll just buy put contracts, because once the money supply starts contracting, those companies are going to do the worst. Now, since I'm up 84% on my brokerage account challenge, I only need to go up another $3,500 or so to basically hit $50,000. That was my goal for this challenge, and I'm pretty confident it's going to happen next week or the week after at the latest. So based on the positions that I'm currently holding, this is going to get me across the finish line. I don't think I'm going to be making any changes. And once I hit that $50,000 and I've officially doubled my account balance, I'm going to have to retool this challenge and figure out what is next. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.